Snap Inc. is absolutely exploding on the market, trading live at $8.37 per share, a staggering jump of 14.65% on the day. And no, that is not a glitch on your Robinhood app. That is not a typo on your Fidelity mobile app. What you are witnessing is one of the most violent and aggressive reevaluations of a company that the market had, by all accounts, left for dead. The expectation for Snap for the last 2 years has been a slow, agonizing bleed. It was the whatever happened to story, the ghost of social media past, a stock that anyone doing serious online investing would have been warned about. The expectation was that this company was in a death spiral, being relentlessly crushed by TikTok and Meta's Instagram Reels. The expectation was that this was a zombie stock, a failed experiment. But the reality, the one that is causing this 14.65% explosion, is that Snap just threw a triple punch combination of news that has forced every trader, every algorithm, and every skeptical analyst to stop and ask, did we just get this completely wrong? Let's establish the common ground, because the bear case wasn't just a story, it was the reality for a very long time. You don't even have to look at a chart, though if you did on your Sophie investing platform, it would look like a fallen mountain. Before this jump, the stock was down 38% year to date. 38%! This wasn't just a correction, it was a capitulation. The narrative was simple and brutal. Snap's core stories feature was copied and scaled by Instagram, and its spotlight feature was a low-budget, low-engagement version of TikTok. The company was stuck in a horrific no-man's land. Its last few earnings reports were a series of disappointments. User growth was stalling in high-value markets. Advertisers were fleeing to platforms with better conversion, and the company was famously, frustratingly unprofitable. It was the kind of stock that a Fidelity wealth management advisor would use as a cautionary tale for their clients. It was a high-risk, low-reward play that no intelligent portfolio algorithm like the ones at Schwab Intelligent Portfolios would ever touch. Insiders were selling, as they had been for months, with no one buying. The expectation was simple: Snap was a dying platform. But then, after the bell yesterday and into this morning, the company launched its counteroffensive. And it wasn't just one piece of news, it was a coordinated carpet bombing of every single bear thesis. This is the reality that has sent the stock to $8.37. First, the earnings. Snap reported its third quarter 2025 earnings, and they didn't just beat, they smashed the lowered expectations. Revenue came in at $1.51 billion, beating the $1.49 billion the street was looking for. But the real story was the bottom line. The loss per share was -6 cents. The forecast, a loss of -12 cents. They cut their loss in half. This wasn't just a rounding error, it was a sign of genuine financial discipline. Daily active users, the lifeblood of any social platform, also beat, coming in at 477 million. And the other revenue line item, which includes the Snapchat Plus subscription service, surged a massive 54% year over year. That's $190 million in high-margin, non-advertising revenue. The ad business was healing, and a new subscription business was booming. That alone would have been good for a 5% pop. But they weren't done at all. The second and far more transformative piece of news was a landmark partnership with the AI startup Perplexity. And this isn't some vague "we love AI" press release. This is a $400 million deal. Perplexity is paying Snap $400 million in cash and equity over the next year to integrate its AI answer engine directly into Snapchat. This is a masterstroke. For its entire life, Snap has been criticized for being a walled garden that's hard to monetize. With this one deal, Snap has just created an entirely new, massive revenue stream that has nothing to do with advertising. It's leveraging its one great asset, its 943 million monthly active users, a huge chunk of which are the coveted 13 to 34-year-old demographic, and getting paid handsomely for it. It's a massive validation of their user base, and it suddenly thrusts Snap into the center of the AI conversation, not as a laggard, but a critical distribution partner. This is a narrative-shattering development. And then the third punch. As if to silence any remaining doubters about its financial health, the company also announced a $500 million stock buyback program. This is a move of pure, unadulterated confidence. A company that is worried about its future does not, as a rule, go out and spend $500 million buying its own stock. This is management looking at the market, looking at the stock price that was in the gutter, and effectively saying, "You are wrong. This stock is cheap, we know what's coming, and we are putting our money where our mouth is." This is the kind of investment signal that institutions look for. It's a world away from the kind of performance that a stock like Apple stock or Nvidia stock is expected to deliver. But for a company on the ropes, it's a powerful statement. So, this 14.65% jump isn't irrational. It's the market's frantic attempt to price in a new future. A future where Snap is not a dying ad business, but a multi-pillar company with a recovering ad unit, a booming subscription service, and a brand new high-margin AI licensing business. This is why traders on Interactive Brokers who were shorting this stock are in a world of pain right now. This is a catastrophic short squeeze, fueled by a genuine fundamental change in the company's story. But this is where self-investing gets dangerous. We have to challenge this new euphoric expectation. A 14% jump is a rally, but what's the new reality? The new reality is that this is still a company that lost $104 million in the quarter. Yes, that's better than the $153 million loss a year ago, but it is not a profit. A $500 million buyback is great, but it's not going to fix the underlying competition from TikTok. The Perplexity deal is brilliant, but it's a promise for 2026, not cash in the bank today. And management themselves on the earnings call warned of headwinds in the fourth quarter. They specifically cited new age verification rules that could hurt user growth. So, the old problems haven't vanished. And look at Wall Street. Even with this phenomenal news, analysts are scrambling to catch up, but they're not all believers. Bank of America and Wells Fargo both raised their price targets, but only to $10, and they're keeping their ratings at neutral and equal weight. That's not a screaming buy. They are saying, "This is great, but we're still not sure." Stifel is even more skeptical, raising it to a paltry $7 while maintaining a sell rating. This is not a unified all clear. This is a deep-seated professional skepticism. This is not a stock for your Fidelity IRAs. This is not a set-it-and-forget-it holding. This is and remains a high-stakes, high-volatile story stock. The difference is that as of today, the story is infinitely better than it was 48 hours ago. What you're seeing on the Sophie trading platform is the battle between a decade of disappointment and a single day of profound hope. It's a battle between the old dying expectation and the new fragile AI-powered reality. This is a world away from the stable, dividend-paying Fidelity ETFs or Fidelity mutual funds. This is a bet. It's a bet that this time, finally, Evan Spiegel has figured out how to turn his brilliant product into a brilliant business. This is a true turning point for the company. So, I have to ask you, comment below if you think this is a permanent fundamental turning point for Snap, or if this is just a short squeeze and hype-driven rally that will fade. As we watch Snap Inc. fight to hold these gains at $8.37, we are witnessing a classic Wall Street battle. The expectation for years has been that this company is a failure, a zombie, a relic of a bygone social media boom. The reality was that it was on a path to irrelevance, crushed by competitors, and an inability to make real, sustainable profit. Today, that reality was challenged. A triple hit of a strong earnings beat, a massive $400 million AI partnership, and a $500 million stock buyback has created a new expectation. An expectation of a second life, a future as a diversified, profitable, AI-relevant company. But the old reality, the financial losses, the intense competition from Meta and TikTok, the history of poor execution is still there, lurking right beneath this one-day rally. The market is celebrating the promise of a turnaround, but the real test, the one that will decide if this stock goes to 15 or back to 5, is the